Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. I hope everybody enjoyed their 4th of July. I hope you had a good, long weekend. I know I did. This Tuesday sure does feel a lot like a Monday for me, so I'm kind of struggling. Went to bed late, woke up really early. It's always hard to get back into the routine. But we had a great weekend. We went trap shooting, skeet shooting, so it was a lot of fun. It's a tradition we've been doing for about 4 years now. Essentially, we get into these golf carts, and it's like going to a golf course where you have these different areas you go, and it might be a part 2, might be a part 3, but essentially you just try to get your shots off. But it's a lot of fun. My fiance got first place out of the group we were at with the women, and I got second place with the guys. So nice showing for the two of us. All right. Well, you didn't come here today to listen about my 4th of July weekends. You want to hear about, or we're all here to talk about, investing mainly in Tesla. So today's episode, I want to talk about, real briefly, the release of the deliveries for Tesla Q2. I want to talk about the stock price, and I want to talk about some FUD and the juxtaposition between two different narratives, which is always biased against Tesla, as you could imagine. All right, before we do that, do me a favor, hit the like button, hit the subscribe button, ring that bell. Let's get into it. All right, well, let's start off with some good news, and we'll try to end with some good news. But first off, stock today, Tesla. Nice day. Started off rough, started off almost down 5%, and then we just rallied to close up 2.55%. And based on the time that I'm recording this, we're even going up a little bit in the aftermarket. We're over $700. So this is excellent, all right? This is a nice turnaround that we saw, especially on the back of the delivery numbers, which we'll get into in just a second. More notably, keep in mind, this is the second trading day of July for Tesla, it's the second green day in a row. So, not saying that, it's all, behind us, all the pain and all that, but, it's nice to have a 2-day green streak right now. So hopefully we can end the week higher. Hopefully we can get back into the mid 700s to 800s. That would be lovely. And we'll just keep monitoring this. But we do have some headwinds ahead. But prior to getting to that, let's just touch on the big news of the weekend. So Saturday morning, I was up. I went to the gym. I was a little paranoid based on the timing just because I get really excited about when these things come out. So I want to be there for the second it comes out. And so we went to the gym. Workout was from 8:30 to 9:30. I figured the numbers would be out by then, and I would have kind of missed it. But sure enough, I didn't. Sat on my computer, played around, did some stuff, just waiting. Finally, I tweeted at Rob Maurer, and he confirmed that he'll go live once the numbers are out. I'm like, all right, so I didn't miss anything. I'm not going crazy here. It's just taking a long time. Sure enough, still happened on the second day of the month, and it came out about 11:45, I want to say, and the numbers hit, and they were in line with consensus. How nice is that? For the worst possible quarter with deliveries and production that Tesla's had in, 2-3 years, as far as all the headwinds and everything they had to deal with, not too bad, in line with consensus. So the numbers, 254,694 deliveries and production of 258,580 vehicles. So great that they hit these numbers. They're not as bullish as I had anticipated, right? I was calling for 270, so I was off by about 15,000 or 12,000, depending if you're thinking deliveries or production. But either way, great showing from Tesla. Now, what's most notable is a little note that they had in here, which said June 2022 was the highest vehicle production month in Tesla history. Now, I think that is a line that all of us shareholders are going to really cling on to. And not just because we're bulls or we're Tesla investors, but because this is something we should cling on to. They had the highest production month of all time in Tesla history in June. Well, now we're going into July, August, September, Q3 with that momentum, all right? Q2, we went into it with Giga Shanghai being shut down, and that shutdown extended. And keep in mind, in Q2, once it opened back up, it's not like the factory just goes like, there we go. Like, my snaps are broken here. It's not like Q2 or the ramp in Shanghai just happens immediately, right? It takes time to get up to that. And so all of those headaches are kind of behind us at the moment. Not saying it can't happen again, right? We need to be cautious about that. We need to expect that it might happen again and not be caught off guard if it does. But the point is, we have dealt with the Shanghai lockdowns. We're ramped back up, and we're going into Q3 stronger than ever with the most production ever. All right. Now, keep in mind, July numbers will probably not reflect the highest production we've ever seen. Why? Well, because we have factories that are going to get shut down. Now, not COVID shutdowns. I'm sure you all know this by now, but I want to go through this sequentially. What's happening is in Giga Shanghai, they're shutting down for 1 to 4 days, early July, so it's probably open already or back up online. And then I think the Model 3 line is going to take a 15-day break or vacation. Doesn't mean the whole factory is going to be shut down during these days. They're still going to be producing vehicles. But why are they doing this? What's happening? Well, they are essentially reimagining how these lines work, getting more efficiencies, making some tweaks, making some changes so that they can yet again increase the amount of vehicles they're making on a per day basis. Rumor has it that by the time this is done, they'll be at about 3,000 vehicles per day, which seems like a lot. So that'd be about 90,000 to 93,000 per month. If you assume some downtime just inevitably, right, that happens, whether it's a holiday, whether it's just to do some retooling, maybe we're looking at 80,000 vehicles a month when it comes to Giga Shanghai. That would be massive. That would mean within a quarter, that'd be 240,000 vehicles. Keep in mind, for Q2, we just did 254,000 with Fremont, Austin, and Berlin. So if this is true, if these rumors are correct, at a discount down to from 90,000, 93,000 down to 80,000, this would be massive, okay? This would mean that we're about to have a very good Q3. Now, Berlin is rumored to also be going through a shutdown. Why is this? Well, based on what we know, and again, this is a very, I would say, soft, not very credible rumor, but based on what we know, Giga Berlin is also shutting down so that they can as well change what they're doing with the lines and be able to put in 3 shifts. So essentially to be able to go 24 hours. Now, this rumor, I think is a very soft one. We don't know a lot. I haven't heard a lot of context on it, so take that one with a grain of salt. But the point is, we're going to Q3 very strong. So although these numbers seem somewhat disappointing, they're in line with consensus. It was only, 26, 27% year over year for Tesla, which with any other car company sounds amazing. But with Tesla, we're used to 50, 60% year over year. But again, taking into context, this was amazing. Now, let's transition into some of this weird biasness that we tend to get. So Ford, look at this headline. Ford reports slight uptick in quarterly sales that misses analysts' expectations. All right. Now, I was reading through this article, and I won't bore you with all of it, but in essence, Ford on Tuesday reported a 1.8% uptick in second quarter sales compared with a year earlier, including a 31.5% increase in June. So they had a decent month over month, is essentially what they're saying here, but their year over year was kind of abysmal. All right. Meanwhile, Tesla is at 27% with all of the lockdowns they had, and they still managed to do so well. Now, the problem I have is I read 2 CNBC articles today. Now, first thing this morning, I'm watching CNBC Squawk Box, and I'm just hearing this FUD left and right. Oh, Tesla misses their deliveries. Oh, Tesla is having problems, just left and right. Like, oh, this is why Elon Musk talked about, not wanting to lay off people because they're having these issues and they're burning billions of dollars to these new factories and just like all this FUD. And I'm just sitting there listening and thinking, are you guys all just a bunch of Ron Burgundies from Anchorman? Do you guys just read what's in front of you and you don't have a thought for yourself? Do you not do any research into the stuff that's being scripted for you? Like how much of this is just, puppeteering or, people sitting there playing and pulling on the strings? Like it seems like it's all that. And, maybe again, I'm just being naive and being in my 30s, but I really feel like that can't be it. You've got to have some people who think for themselves. At some point, you have to realize like, okay, this isn't true. That's not true. Anyways, I'm diverging here. My point is, I'm hearing all this Tesla negativity on the TV, right? And then we hear about Ford. Now, Ford essentially missed what's going on or missed their estimates by analysts with their deliveries and all that. And all I'm hearing on the TV is, well, it's tough time, supply chains, we still have chip shortages, they'll get back up there. It's just making excuses. That's all they're doing, making excuses for Ford. That's it. It's the same thing we saw with GM. When GM had the 90,000 vehicles or 95,000 vehicles that are just sitting on the lot incomplete. Same thing. We just hear all of them talking about excuses. Well, if they had the chips, then it would be a different story. All this, just nonstop FUD. But it's so comical to see how two different perspectives. And what's the one difference between them? Well, the majority of car commercials that we see are car commercials. Tesla commercials, non-existent. Tesla doesn't pay for any car commercials. So the question is, what happens if CNBC? What happens if Yahoo? What if Bloomberg, CNN, Fox, anyone? What happens if they start to report, let's say, as critical and as hard as they do on Tesla, even though it's wrong, if they gave that same type of attention to these OEMs, what would happen? Well, odds are all that advertisement revenue they're getting would dry up. Odds are that these companies that rely on these advertisements, which the majority come from the automotive industry, well, what would happen? Well, they probably would be in a very hurtful financial position because they would lose their revenue. So the question you have to ask yourself, that we should all ask ourselves, is how honest is any of this we're watching? Now, you guys, this audience, you guys are next level. Most of you are sitting there saying, yeah, obviously, Nick, we all know this. But for those of you who maybe haven't thought about this, just a new perspective, just my thought. All right, let's transition. We do have some things that we need to be careful with as far as what's going on. Again, this is short-term stuff, all right? Long-term, none of this matters. Long-term, my opinion, not financial advice, keep buying, keep turning, keep dollar cost averaging. Things are cheap right now. Everything's cheap. I mean, honestly, you could probably go into the stock market, put it on the dartboard, all tickers, with the dart, throw it, and you'll probably land on something that's going to be a good value these days. Now, me, risk reward, biggest upside, there's nothing compared to Tesla. My opinion, not financial advice. With that said, in the short term, what do we have going on? Not just Tesla related, but just in general, the macros. Well, in the macros, we have CPI we're in July, so CPI for June. Those numbers should be coming out, right? That's the inflation indicator. We also have the Fed decision on what they're going to do with rate hikes, all right? Will they do a 75 basis point? Will they do a 50 basis point? Will the fears of recessions and what we saw with the Atlanta Fed indicating that we are in a recession, or it's going to be an official recession soon once the numbers are released, will that make the Fed slow down, chill out on what they're doing with rates, because they are effectively setting us into a recession? At the same time, oil today dropped under $100 a barrel. Now, while that might be celebrated, and in my opinion, it is bullish for the stock market, it also signals that we are in a recession, or that the market fears we're in a recession. Why does that make oil go down? Well, if people are doing less things, people are traveling less, going out less, not eating as much, then there's less demand for oil. And don't kid yourselves, this whole Russia thing, Russia's still selling their oil. So it's not like we have less supply out there. It's just there's less supply to where it was going. China's buying it. India's buying it. You better believe Russia is getting their oil out there. You better believe people are buying it because it's at a discount. And if you have no qualms with what Russia's doing, well, why the hell wouldn't you? Right? If it doesn't bother you, if you don't have any kind of moral compass or thoughts or opinions or anything with that, if you're of the opinion, not my problem, it's them, and that's the opinion of India, that's the opinion of China, well, then why wouldn't you take oil from Russia at half the cost? It kind of makes sense. But so if China and India aren't buying from the rest of the market, well, then it's got to be somewhere, right? It's got to go somewhere. So anyways, the point is, if we do go into recession, that means that there's going to be more supply of oil, which is good for people who are trying to lower oil prices, and that's bullish for the economy. So let's recap. We got CPI numbers. We got the Fed meeting with regards to interest rates. CPI might come in 8.6 again, might come in a little hotter. Some people are estimating 8.8, but let's just say it comes in line. And let's say the Fed decides to still do a 75 basis point rate hike. I think at this point, those are both kind of expected. 75 basis point rate hike is anticipated, kind of baked in. I think it's at a 94% baked in at this point. So, nothing really too worried about that. If they were to decide to do a whole basis point rate hike, a whole 1 point, 100 points, then that's where I'd be a little worried. Now, regards to Tesla in this month, there's really one potential headwind with Tesla, and that's going to be Q2 earnings. Now, I'm more of the mindset that Q2 earnings are going to be very bullish for Tesla and the stock itself. Why? Why do I think this? And this is me trying to end on a high note here. I think Q2 results will be pretty much what everyone expects. All right, it's going to be in line. I think gross margins might not be as bad as anticipated, mainly because Tesla's been able to raise prices. They're pulling forward the higher trim levels, which they have more margin. They're pulling forward anything with FSD, with enhanced autopilot. So they're doing all these things that really help the margins. But what I think might be the most bullish for Tesla in this Q2, not the numbers. I think the numbers are irrelevant. I think it's going to be whatever Zach, Elon, and Drew say regarding 4680 batteries, Austin ramp, Berlin ramp, and more importantly, the run rate that they're at right now for Q3. Can they say the following words? We are still on track and we still believe we will do 50% year over year. If they can say those words, the stock market, Wall Street's going to love it. So I think those are the things that are going to happen. I think we're going to hear that 4680 battery had some hiccups, but they figured them out and they're ramping it up. It's going along well. We're getting there. We're making progress. Austin, it's ramping up now with the 2170 batteries. I think we'll hear good news about that. Berlin, by the time we get to this earnings call, they'll have the new shifts. The factory will be back up and running. I'm sure they'll say something positive regarding that. And then finally, I think they'll reiterate the 50% year over year. And that's what Wall Street wants to hear. That's what Zach's guided for nonstop. Zach even said he could do that with just Shanghai and Fremont without Austin or Berlin. So I think we can definitely get there. I think that those are the things they need to do to thread this needle to have a good quarter. And if all that happens, ironically enough, on what you could argue is the worst quarter Tesla's had in several years, we might finally be green the day after earnings. Haven't seen that in a long time. So as ironic as that would be, I think that we might actually see some positivity out of their earnings. I don't think it'll be as big of a headwind as people might anticipate going into it. And then don't forget, we have Investor Day, Shareholder Day, a few days later, right? About 2 weeks later. And that's where they will announce the stock split or we'll vote for it. And then they'll probably do it within a few days from there. So I think there's a lot to be excited about. I think, like I said, the second half of the year is the time where things should turn around. Don't forget, last year, from the beginning of the year till right around this time, it was also kind of a lull, right? We also kind of saw the stock trading right around where it is now. So it was the second half of the year that we really start to see that momentum. It's when we really broke 900, flew right into 1,000, right to 1,200. So who's to say that that doesn't happen again? If anything, I feel like a lot of the weak hands, the paper hands, have kind of been flushed out of the market. So maybe this is a time to really start to, not completely, but start to build up that optimism within the stock market, within Tesla. There's still a lot of macro headwinds, still a lot of macro things that can affect everything, but regards to Tesla, I think Tesla's very, very strong from a balance sheet, from a company, from a leadership, from investors. All right. We're going to leave it there. Do me a favor. If you enjoy this type of content, if you find any value in this and you want to share it with other people, it's very easy. All you have to do is hit the like button, hit the subscribe button, or ring that bell. I love you all. Really do hope you enjoyed your long weekend, and I'll catch you next time. Peace.